So howdy everyone, welcome to Co-Living, Purchase Homes Investments Co-Living webinar. We're really glad that you could join us today. So hopefully you get some value out of the webinar and it's informative. We don't want to try and push this webinar out for too long. We want to try and keep it as short, sharp and valuable as possible to you. So if it's okay with everyone, I'll probably skip straight into discussing what it is that we've created, and hopefully it makes sense and is something that we can discuss further with you following this webinar. So I will say this, you are all muted, so we can't actually have anyone else talking throughout this webinar. It will just be myself, so hopefully I can keep it interesting for you guys. So it won't be overly interactive in that respect. But hopefully, as I said, you'll get some value out of it and you can see or share the excitement that we have in this product the same way. So this is our website, and the website has been created as a tool to, I guess, really assist in understanding the product as well as possible. It's quite interactive. There's a couple of cool and fun toys that you can play with. So I would encourage people following this to jump on there and have a bit of a play around. But what I'm going to do is I'm just going to actually get you started. So the really attractive thing about co-living is really the income potential that comes with buying one of these properties. And, you know, we see yields of anywhere up to about anywhere from sort of 8% upwards, which is fantastic. Generally a traditional investment, depending on where you buy it, will sit at around about 4% yield, you know, maybe up to 5% yield. But prices are quite inflated currently with purchase prices. So the yields have been a bit lower for investors. So that's caused a problem. A lot of investors have been out of the market for quite a while. And that's been one of the reasons as to why that is. We believe that this product will be a real game changer for people wanting to get into the market in a safe environment. And a really efficient and dynamic environment, because yields like that, you just don't get them within residential property until now. So that's a good thing. Cool. So 3 income streams is how we do this. You may have come across co-living in the past. This is an advanced version. We think it is. Or you might have even come across dual key living as well, which is a pretty well-known strategy, which we also like. Challenge with dual key that we find is when you're looking to on-sell the property, the resale appreciation is generally the challenge, being that it's a property split in half. And how do you manage the leasing and on-sale particulars behind that? So with these properties, they're all 4-bedroom, 3-bathroom homes. So 3 bathrooms is appealing for families. They've all got air conditioning in each of the first 3 rooms. Lockable pantries, high ceilings, solar panels, great specification. So the resale complications behind this are very low. People of all markets and market types will be attracted to this kind of product because it's not just specifically for investors, although that's what we're delivering it for as an investment vehicle. So over 1,300 people were surveyed firstly, which I think is very important to understand. And these are people that are relative to the industry, people who are actually leasing these properties. What we have found is that a lot of people feel like it's student accommodation. It's very much not student accommodation or rooming accommodation. It's co-living. So the average age of tenants is 33. Average tenure is 4 to 5 years, actually 4.5 years, bang in the middle. Which is a great tenure. And the reason we see that is because people value what it is that they're getting for, you know, around $300 a week. They're getting a brand new, high quality, dedicated co-living property with all of the things that they want. And those things that they want: private bathroom, lockable pantries, dedicated co-living. So no owner living within the property with them, so that they can live with a bit of independence, fully furnished and air conditioned within their rooms. So we've been able to achieve that. So there's over 30,000 rooms. Flatmates.com is the main market shareholder with approximately 15,000 rooms currently. We have actually aligned with flatmates.com.au so that you can access some very, very valuable information, which I'll go to shortly. I think that you'll really enjoy it. And the whole purpose of sourcing that information is to make decision making processes as easy as possible. We deal with a lot of mum and dad investors, and mum and dad investors don't necessarily have as much experience as a seasoned investor. So they need more information, more confidence that they're going into a good investment. Now, less than 75% of those are furnished, less than 30% are dedicated co-living, and less than 5% have a private bathroom, which we already know is very important for what people want. Over 55,000 tenants, and flatmates.com have over 20,000 tenants, people looking. Loan household numbers have gone up considerably in recent times, and the projected forecast for loan person households is increasing considerably. In 20 years, they're saying it's going to be almost 100% larger than what it was in 2016 at 3.5 million. It's a lot, it's considerable, and it's also an important factor when considering investments too. Population growth does counteract or does act towards that outcome a lot. Sorry, losing my my English ability right there. So one of the biggest issues with this type of product previously has been the building regulations. Actually being able to get approvals to build these kind of properties. Now, this is one of the reasons why this is an advanced model of co-living, because we've been able to get around quite a few of the planning regulations that do or have previously made it hard in the past to be able to get these type of properties over the line. So we manage all of that for you. It's a complicated process. I don't want to stress you out with that information now, but you can see a little bit there as to what's important and how we've got around that. We've gone through this. It's a high specification home, 4 beds, 3 baths, traditional home with 3 private bathrooms, lockable pantries. They're fully furnished, individual AC, solar panels, high ceilings, quality stone throughout, and data points TV to each bedroom. So it's a really, really beautiful property that you'd be acquiring. Finance and construction, yeah, we've been able to get around that too. Generally, banks are not favourable towards co-living or dual key properties because of this resale component. This is now no longer a concern. The construction costs alone in these properties are higher than traditional building costs, but much lower than building costs of previous type properties that may give a high income. So really important to understand. Property management, all managed under the one roof. It's very interesting how the tenants are acquired and how it's managed. It's much more complicated. There's more to it. There are some challenges with it. We do manage that for you. I think it's very important to understand that as a landlord, when leasing out any investment property, there's always risk that you're going to get tenants who don't abide by your expectations of living within that property. But all we can do is manage that as best as we can, and also manage the applications that come in from the start too. So this is traditional in that respect. Applications come in like a traditional application would. You have the right to accept or decline any application that comes through the door. And being that it's all owned under the one roof, the builder and the property management company are the same company. So, targeting towards getting tenants in from day one is done, months out from the home being built, which is a big advantage. Exit strategy, so you can obviously sell this to an investor who wants a high yielding property. I personally think, as someone who's worked with investment properties for 15 years, I personally think that income is the most important component to an investment, and reliable income. I mean, commercial property would be a prime example of, property that has great income potential. However, it's very volatile and the vacancy rates are a lot higher. With this, vacancy rates are a lot lower because it's a property that's very, very much in demand. People need affordable housing to lease, and these people are professionals, they're government workers, they're professional, the young professionals, separated people, all sorts of different types. It's not just students. So you can on-sell this to an investor who wants a strong income that's reliable, or you can sell it to an owner-occupier who wants a quality house. So there's big advantages in both of the respects when it comes to exiting the property if, you know, if your situation changes. And just quickly with the cash flow, you know, I guess one of the things with investing that people always consider is, you know, what's the risk involved? And if we lose our job, for example, or God forbid something should happen, my partner might be the main breadwinner in the family, and for some reason he can't work or support us anymore. How are we going to manage these investments that we've acquired? You know, and especially if the property value hasn't gone up, because that happens in property. It doesn't always go up. Generally, if you're buying within a developed economy, Melbourne, Sydney, Brisbane, over the longer period, it will go up because, well, inflation will drive that for starters. You know, but what happens if it doesn't? What happens if it goes down in 10 years' time? You know, how are we going to be able to support that mortgage, those overheads, those expenses? So it's not the debt that will send you broke or put pressure or stress on you. Generally, it's the cash flow. How are we managing that to protect ourselves? So I hope you found that really interesting. You know, that's the basic introduction to what we're doing. The information I wanted to share with you is around the supply and demand, and it's a really, really great feature, which I think you'll like. I hope you'll like. Basically, what we want to do is help people understand, or share with them information that will help them understand how many people are actually looking. Why are we suggesting that you go into this area? Why are we suggesting that we build this type of property in a certain spot? And how we do that is generally through assessing the supply and demand. Now, we build predominantly in Victoria and Queensland. A good example is within the Logan region, and I hope that this crosses over. If we search in Park Ridge, which is you know, quite a happening area currently, what you will find with Park Ridge, which is interesting, is that there's a lot of family homes being advertised, a lot of 4-bedroom family homes for rent, and there's an oversupply. There's also an undersupply of people who need that. As we've seen before, lone person households are becoming more and more prominent. People need those more affordable properties, not necessarily the big 4-bedroom family homes. So if we go to Park Ridge, what you can do is you can actually just go bang number of tenants. And what we'll show you, it was actually 146 yesterday, so 8 of those have found something, which is great for them. It'll show you how many people are looking. So 138 people, Alicia at 300 a week, Jasmine at 320, Nicole at 450, Kira at 350, etc., etc. So there won't be anyone on there less than 250. So that was the key component that we put in there. And this is independent third-party information. So it's a really fantastic tool available. It will show you when they're available. And we'll actually communicate with these people as the build is coming closer to completion. We then go to the amount of rooms being advertised. You go to the supply room and 0. There's actually no dedicated co-living or house share / room share availability within that whole region. So the people that are searching are having to find different solutions. They're having to maybe rent with a friend who's already got a property. Maybe they'll have to spend more than what they wanted by getting a family house. Maybe they'll buy rent an apartment. You know, they're going to have to think outside of the square. They're going to have to get creative. And then this is one of my favorite tools. We've got a new tool coming soon, which I think people will really like. It's a retirement calculator. We'll show people what, we'll give them a tool to visualize, you know, their retirement. When do they want to retire? How much do they want to live on? How long do we think they're going to live for? Because there's some pretty reliable stats around that. But this is a comparison calculator. So what we're doing here is essentially working out. So let's do a 4% interest rate. Investment loans are generally a little bit higher. You might have a $50,000 deposit. You might be using equity. That's how a lot of our clients purchase these. And what it'll do is it'll show you the comparison between a traditional family home, 4-bed home, and a purchase homes investments property, which will probably be co-living. So firstly, land cost, that's not going to change. That's independent of the build, so that won't change. The building cost will. So building a home like this is more expensive because of the en-suites in the bedrooms, you know, air seats to bedrooms, lockable pantries, solar, these kind of things. Generally going to look at about 30 grand more than a traditional home. So you can see there 260 to 290 is pretty evident. And a traditional family home, you're not going to acquire a furniture package or furnish it too often. But with our homes or the co-living property, you do actually need to furnish the property, which is a challenge for a lot of people. They can't afford it financially. We do have lending solutions for that. And obviously people with equity, are ones that are in a good position to be able to do that. So you do see a difference. The total package is a 30K difference, but the total outlay is actually about 55 grand different because of this furniture package. So if you see weekly rent, about 420 for the traditional, which is very accurate. And then for the co-living property, 900. Agent fees will be a fair bit more expensive because of the amount of rent that you're receiving. And the letting fees, agency fees are generally higher for this product too. So 8.8%, that's probably quite conservative for a traditional home. So you might find that the agency fees are a little bit lower than that, which obviously brings back the difference between the cash flow. It's not going to make a major difference. Rates the same, letting fees more because of obvious components that we've discussed. Maintenance should be 1,000 here as well, but that's fine. Water. Stamp duty's the same, legal fees the same. Cool. So positive cash flow for the traditional family home is $19. This is after tax and depreciation, all of that kind of jazz, based on interest-only loan. And the positive cash flow of an investment through co-living, $288 or $268 a week. Now, if you do numbers over a long term, work out how long it is that you want to keep the property. Let's say you want to keep it for 10 years. I'm reasonably good with my numbers, and a weekly difference of $268 is about $13,000 a year in income that you'll be generating, over a traditional property. And so in 10 years time, just purely from an income standpoint, based on those figures, going to generate about $130,000 more than what you would with a traditional family home, which is a considerable difference. Now, one thing that we also show people, our clients, how to do or what to do and how to assess it is to show them what kind of difference you will have with your principal mortgage if you put that profit of $288 straight back into your principal mortgage, which doesn't have any deductibility with its tax, with its depreciation, with the management of that, the interest on the loan. Can't claim any of that because it's a family home. And on a $600,000 property, or a property with $600,000 mortgage over 30 years, if you put that cash flow straight back into that mortgage, remembering that cash flow is after all of your expenses, you knock about 13 to 14 years off your principal mortgage. So not only do you have a situation when you're creating a much faster return within your principal property or building more security through that, whilst managing the cash flow of an investment property, you also have the benefit of two properties hopefully growing in value as opposed to one. As we do know, most properties generally in developed areas double about every 10 to 12 years. So if you're spending $500,000, $600,000 on an investment property, hopefully in 10 to 12 years, you're looking at it being worth $1 million, 1.2, something like that. Obviously, we can't guarantee that, but that's what we aim for. So all of a sudden in 10 years, now the aim with this as well is because the cash flow is so strong and because it helps support equity growth quite quickly, you can quite often find that you're in a position to actually get into a second one, third one, fourth one, whatever it will be, depending on your appetite to invest, can fast track those abilities. So we really like it, and the clients that we've got really taking this up now are also very excited because of numbers that we're seeing here. Now, I would like to say that the $900 a week, to achieve more than that is absolutely possible as well. And even if we're only leasing out 2 rooms at a time as a return at $600 a week, that's still a very strong yield for the outlay that you're putting into it. So they're the main components that I wanted to share with you. We've got a lot of information on this website that I'd love for you to have a look through. You can see some of our designs here. I'll just bring it up quickly so you can see the architecture behind it, the drafting behind it. It's quite intuitive. It's yeah, something that we love representing. Let's have a quick look here. Okay, that's faulty for some reason. Anyway, we can send them through. That's no problems. Next step for this product and for us, for the people that are interested in learning more about this, is we do have a register. We do ask for people to submit an application to that. We do take a deposit of $1,000. It's fully refundable should you change your mind and not want to proceed on anything. Situations might change within your personal life. Whatever will happen, we're not going to question that. However, if we do find something, because access to availability with this product at the moment is our biggest challenge. It's not like the old days where we could project market 10 different developments and you'd have your choice. It's now those who are deposited have submitted the information that we're required to be able to go to a contract quickly, will be the ones that will get access to the opportunities that arise. So we'd love to speak to you more about that, share more information around that. And obviously the best thing that I would suggest from here is to book a time. We'll send you through a link. You can have a one-on-one session with myself where we can dig deeper into your personal situation to work out whether we feel this is a mutual fit for you, both from our end, but obviously from your end too. You're the ones that are, making the moves and deciding upon whether this is a fit. And getting to know each other, because please keep in mind, guys, that this is one strategy that we, apply and we love it, but it's not for everyone. We have all sorts of solutions within the property space, mainly construction and development, that we can work with you on. But obviously we need to understand who you are a little bit more before we can do that. So thanks very much for your time. Shoot through questions via email as well. I've really enjoyed presenting to you guys, even though it's not interactive. I hope that you've enjoyed it, got some value. I haven't really prepared for this. I've really just got on and shared what I know. And hopefully, as I said, there was some value in it for you. So thanks again. I'm gonna end the session now. Thanks again, and have a great day, and we look forward to speaking to you further soon. Thank you very much.